Hi, and welcome everybody. Thanks for joining us for Fastmarkets webinar on exploring the future of global low-carbon aluminum pricing. I hope everyone can see the slides and hear me clearly. If you can't, please drop a note in the question box and we'll help you out. This webinar is being recorded and we will be sharing the slides afterwards. I'm Yasemin Esman, the US aluminum reporter based out of New York, and I'm joined today by my colleagues in London, Imogen Dutman and Carrie Bone, our research analyst, Andy Farida, and Fastmarkets principal consultant, Christine Rage. Next slide, please. Christine will give us a picture of the market. Carrie and Imogen will explain our methodology and give us a view of the European market. I will explain what's going on in the US, and Andy will share his analysis of the market. The entire webcast will take an hour and each speaker will talk about 10 minutes. At the end, we will have time for Q&A. So please put any comments or questions in the questions box and as we move along, and we'll get to them at the end. We will also have a poll question during the session. I hope that by the end of this presentation, you will walk away with some new knowledge about how the low carbon aluminum markets and their pricing work and what are the elements affecting them. If you're interested in learning more, please reach out and we can set up confidential one-on-one meetings. Now I'll pass it on to Christine.
Hi, thanks Yasmin. Welcome to everybody. Low carbon obviously has become a very, very hot topic in the last couple of years, obviously, which is why so many of you have joined us here on the webinar today. And yet still at this stage, it makes up quite a small share of overall deals. This morning or this afternoon, I'm going to give you a brief introduction into some of the key themes in the sector, many of which we're covering in detail for our consultancy clients at present. So as shown in this chart, aluminium for use across all end-use sectors is available in a huge range of carbon footprints. At the very high end here on the right-hand side, we have primary aluminium produced from a brown coal power source, which can have a footprint in the order of 16 and even up to 20 tons of CO2 equivalent per ton of aluminium produced. This goes all the way down to on the left-hand side to material produced with almost 100% post-consumer scrap content, which can come in at under the 1 ton of CO2 equivalent emissions. Obviously, so what we're forecasting on today will be the portion of the market with a maximum footprint of 4 tons of CO2 equivalent, the so-called low carbon aluminium. And the reason why we have sort of taken this 4 ton CO2 equivalent will be covered later by my colleagues on the price reporting side. Next slide, please. So the terms low carbon or green aluminium really first started to emerge in the 2010s and related back at that time really just to primary aluminium produced from a renewable power source. Since that time, since 2016, all of the major primary producers that produce material from hydro or indeed from geothermal power sources have launched what are now certified low carbon aluminium brands. Here we have Rio Tinto, Alcoa, Hydro, Rusal, and Century, all companies producing primary metal from hydro and geothermal power sources. But the reality of this is that, low carbon aluminium has been around for decades. Low carbon primary aluminium has been around for decades. Many consumers have been buying this material for many, many, many long years. This has largely been, at least until this stage, due to geographic convenience rather than due to any sort of active ESG considerations. Next slide, please. Since the launch of these brands, which were, about 7 or 8 years ago now, the situation has shifted somewhat. Net carbon zero, the green transition, circular economy, ESG targets, all of these terms really have become part of daily conversations and discussions in multiple sectors. And aluminium, as we all know, is a very key pillar to this transition and a key component of it. So as these developments gain momentum in the sort of like the bigger industrial picture towards these targets, the pull from consumers to actually get a hold of low carbon aluminium is only accelerating. So in this slide, I've just pulled out the names of several companies. Some of these companies that are at the stage where they have simply signed MOUs in terms of planning to use low carbon aluminium. Many of these companies are already very active and have rolling contracts already in place for the purchase of low carbon aluminium. So it is something that is very much underway. In fact, the situation really has developed so fast in the last couple of years that some companies, and not necessarily any of those listed on this slide, but some companies are already starting to reach the point where they will no longer purchase aluminium, or primary aluminium, which doesn't have a carbon footprint with a cap of 4 tons of 4 tons of CO2 equivalent emissions. As we can see here on the on the left hand side, the transportation and the OEMs is really one of those the big players in this sector, and really these are the companies, or many of these companies, that have been at the forefront of this shift. But there are many other sectors too who have become fully involved and become fully invested in this trend, including packaging, construction, consumer goods, and many others. Next slide, please. So how is this situation going to develop? So here on the right hand side, we can see that only around a third of the primary aluminium produced outside of China is actually low carbon at present. Approximately another third, roughly, is produced using gas sourced or gas driven or gas powered power stations, much of which obviously is located in the Middle East. And the remainder of this material, which is still in the order of sort of 4 million tons, is still manufactured from using coal-based power sources. And as a result, this material has a very high carbon footprint. So the limited availability of green primary metal means that the aluminium sector will remain reliant on non-green primary metal for a long time to come, if aluminium is ready to fully participate in the green transition. Take, for example, the US. Here we're showing on the chart in the bottom left-hand corner, which is heavily reliant on primary metal imports. So the US imports in the order of sort of 4 million tons a year of unwrought material, a large share of which comes in from Canada and is already low carbon by its very nature. But another third of the imports are non-green material coming in from other regions, most notably from the GCC countries. And here we can see that Russia was still a sort of factor in material coming into the US back in 2022. But given that Russian purchases are no longer an option for US consumers, this share is set to rise in 2023, and 24. But what other alternatives are there? Well, secondary aluminium. This is going to be a sort of an area of key growth going forward, and is arguably the fastest route to low carbon material. This is an area that we are starting to look into and are looking into in increasing detail with our consultancy clients. However, at this stage, not all sectors can use these grades, nor is there sufficient availability to fully replace non-green primary metal. Next slide, please. So the other sort of still largely overlooked area really is the possibility of green aluminium from China. This is just really a quick snapshot of the situation. The share of primary metal being produced in the country from renewable sources is rising fast. And something else which is catching up as well is the certification, which is really just starting to gain momentum at present in 2023. At this stage, we understand that the main push is coming from overseas buyers to get certified material. And these are the buyers of both semi-fabricated Chinese products, so that would be the rolled products which are coming out of the country, but also from the producers, the ex-Chinese producers of consumer goods that use manufacturing facilities within China themselves. This again is another area which we're a key space to watch as we move forward, and then again an area in which we're starting to look in detail for our consultancy clients. So that sort of summarizes my brief overview. I'm now going to pass on to my colleagues on the price reporting side to follow up with the current conditions and of low carbon material and recent developments. Thank you.
Thank you, Kirsten. Before I take us through our low carbon differentials, I wanted to touch upon the Fastmarket pricing process, which is how we assess all the markets we cover here, including premiums and differentials. Trained reporters in the key global markets collect data from a variety of market sources. This includes assessments, bids, offers, deals, and deals heard. This data is then entered into our secure database, and the data is reviewed for the whole session, whether that's a week, day, or month, and the level is set. The data is reviewed for its confidence and significance. Does that include deals reported with tonnages, a deal heard? Has it been heard elsewhere in the market? Is it in line with other data points? And the level of detail with it. The prices are aligned with IOSCO standards, and our benchmarks are externally audited under IOSCO principles. The price is then set after being reviewed, and it is sent to be peer reviewed by another member of the editorial team before it is sent to an editor to be approved and published. Next slide, please. Following the market developments Kirsten just touched upon, in order to bring transparency to the emerging low carbon market in Europe, Fastmarkets launched its European low carbon differentials back in 2021, one for P1020 and another for value added products. For metal, the maximum of 4 tons of CO2 on a scope 1 and 2 basis under GHG protocol, with these differentials being published monthly. Fastmarkets also publishes inferred low carbon prices for duty paid and duty unpaid markets, and 2 billet grades, which are calculations using the midpoint of the underlying premiums and the midpoint of the appropriate low carbon differentials. The low carbon aluminium suite is part of Fastmarkets' existing aluminium offering of 65 prices and premiums, including the IOSCO accredited daily duty unpaid Rotterdam premium, which is underlying for CME and LME contracts. Next slide, please. So I'll take you through how the differentials work in Europe. In Europe, the low carbon differential is a separate upcharge achieved for low carbon material on top of the LME price, the underlying premium level, and other components such as freight. There are some examples here. For example, if a P1020 trade was reported at $120 per ton for low carbon material and there was no low carbon upcharge, it would go into the P1020 assessment at $120 per ton as normal. However, if the P1020 premium was $110 per ton and there was a separate $10 upcharge achieved for green units, then the $10 trade would go into the assessment for the low carbon differentials. And this is the same for billet. If a trade was reported at $500 per ton for billet, it would go into the billet assessment as usual at $500. But if it was a $480 per ton premium with a $20 green upcharge, then the $20 trade would go into the VAP low carbon differential assessment. We're discussing upcharges currently, but a differential could also be in discount if the market fundamentals were to change, such as a large increase in supply or drastic fall in demand. These differentials can be used on top of Fastmarkets' underlying premiums for P1020 and value-added products such as billet and PFA, as well as other products that Fastmarkets doesn't currently price, such as wire rod and slab. Next slide. Kirsten touched upon some of these demand sectors, so I'll just briefly go through this. The automotive market was an early driver for low carbon aluminium market, with OEMs tightening their supply chain requirements in a bid to reduce their own emissions. The growing move towards EVs also supports demand for units. The building and construction sector is also a growing market for green aluminium, with things such as extrusion profiles made from scrap, supporting people using those for life cycle assessments of their buildings, and a growing focus for sustainability in new developments, as well as recycling material from buildings at the end of their life. The cable sector for power grids and for growing solar power industry is also lending further support, as well as other factors such as supply chain traceability, which has become more of a focus following the US tariffs and the introduction of CBAM, as well as emerging brand preference following the start of the war in Ukraine, which has tightened low carbon material supply. I'll now hand over to Imogen, who will take you through the price trends for these differentials.
Thanks very much, Carrie. So as you can see here, the chart is showing the development of the low carbon P1020 differential since its first launch in March 2021 up to present. The light blue line on the slide is the high end and the dark blue is the low end of the range. It is worth noting as well that the latest monthly assessment was Friday, November 3rd, and the differential will next be published tomorrow on Friday, December 1st. As you can see from the chart, the low carbon upcharge P1020 was at $0 per tonne when it was first launched, but has since matured and grown substantially, recording a pretty consistent incline and peaking at $25 to $40 per tonne upcharge in September 2023. The differential did drop, however, for the first time in October of this year, largely as a result of the weaker underlying aluminium P1020 market, with sellers noting to Fastmarkets that they were willing to negotiate a lower green upcharge in order to secure liquidity in otherwise what has been a very challenging market. However, despite the short-term bearish sentiment, demand for green P1020 does seemingly remain robust into 2024 and beyond. However, we have now heard offers close to $50 per tonne in some instances for 2024, with some participants noting an increase in consumer requests for green material, as Kirsten and Carrie both noted, as a result of kind of ESG requirements growing and green getting more and more into the spotlight. There have also been some supply side concerns noted for next year and beyond. Obviously, as Carrie previously mentioned, Russia a key player in the low carbon market, and several participants self-sanctioning since early last year, somewhat tightening the supply for those consumers, not everyone, and also the imposition, obviously, of the 200% tariff on imports into the US. If we can go on to the next slide, please. Here, I will quickly just touch on the trend between low carbon and the underlying P1020 premium. So here in pink, you have low carbon, and in blue, it's like in warehouse duty paid premium. This is on a percentage change basis of the two over the past or since the beginning of the year. This chart shows quite nicely how sellers have continued to find value in low carbon units, despite what has been a relatively substantial decline on the P1020 underlying market. Despite the decline we saw for low carbon in October, there has been a continued premium achievable for green units in Europe, as you can see from this chart. If we can move on to the next slide, please, we can see here the pricing chart for low carbon differentials for our value added product from March 2021 again until today. Next pricing session tomorrow. So again, there will possibly be an update then. This slide shows the existing VAP differential inclusive of primary foundry alloy, billet, wire rod and slab that Carrie previously mentioned. But from December 1st, so from tomorrow, following our recent consultation, Fastmarkets will be launching two new differentials for VAP. One will be focused on standalone billet with a 3-month delivery window, and the other for VAP X billet with a 12-month delivery window, which I will run through in more detail on the next slide. But oh, sorry, can we just go back? Thank you, sorry. In terms of pricing trends, however, unlike P1020, the existing VAP differential, as seen on this slide, has captured a low carbon upcharge since the very beginning as a result of strong demand seen for low carbon products from end use consumers. As you can see, however, the spread between the high and the low end of the range has widened, particularly over recent months as product markets have diverged. We have seen PFA, for example, capturing a higher low carbon upcharge than billet over recent months due to a stronger automotive versus construction sector. Declines have also been seen slightly quicker for billet, which is traded more on a spot basis than some of the other VAP markets, hence participants noting a minimal upcharge for billet currently around kind of $10 per tonne maximum in comparison, as a result of the kind of weaker underlying market. In some instances, we even see participants noting difficulty in selling spot billet, let alone achieving low carbon upcharges. So we are seeing a bit of a wide range emerging on this differential. Next slide, please. So as I mentioned, just a quick update here on our new price launches. From tomorrow, we will be launching 2 new low carbon differentials, which will also lead to the phased discontinuation of the existing VAP differential. The 2 will be, or the 3 rather, will be priced alongside each other until March 2024, in which case that will be discontinued. The pricing notice for that is available on the dashboard. It's also available on our website, and otherwise please email me if you'd like to see a copy and I can send that over. That's no problem. Just to add on that as well, P1020 differential will in no way be affected by that change. The specifications for the new differentials will be the same as previous in terms of CO2 content, and will also be published on a monthly basis. The change is to better reflect the developing trading mechanisms that we see to capture longer term contract liquidity for wire rod and slab, which are not traded on a spot basis as frequently as something like billet, for example. We have also one of our kind of recent changes to our low carbon offering, less recent, but in January of this year, we also launched European secondary aluminium billet premiums for the first time, focusing on kind of market demand for greater transparency across this area. Next slide, please. Finally, from the European side, a quick update on what we're seeing in terms of further developments and areas to watch in the coming year. Shortly, I'll pass over to Yasmin to talk through the recently launched low carbon differential in the US, but at Fastmarkets, we are also currently looking into the feasibility of launching a low carbon differential in Asia, with increased demand for transparency in the low carbon space noted in areas such as Japan, and some upcharges already reportedly being achieved in the region as well. We do anticipate that there will be growing focus on the low carbon content of metal as a result of something that Carrie mentioned earlier, with the imposition of CBAM, full implementation obviously beginning not until January 2026, but also with the introduction of US tariffs, stricter supply requirements, etc. There is also a greater focus on scope 3 emissions and supply chain traceability through to things like alumina and bauxite, as well as growth in green financing and stricter lending requirements seen from banks. So all of this together kind of means that low carbon differentials are likely to remain in the forefront of discussion, despite what it's currently seeing on the pricing side as a result of the softer underlying market. But now I will pass on to Yasmin to talk about what's happening in the US.
Thank you, Imogen. As Imogen mentioned, we recently launched 2 new low carbon differentials in the US. This was done to meet the growing interest from market participants in low carbon units. This interest was mainly driven by consumers that looked to reduce their own carbon footprint, mainly in the areas of auto and chem manufacturing businesses, as well as those industries that serve the energy transition industries. The differentials were launched on November 3 and will be assessed monthly going forward. So we have our second assessment tomorrow. Just like in Europe, they are differentials and not premiums or prices. Both differentials were 0 on their first day, which means they were trading on par with non-low carbon units. We expect them to remain 0 for some time, but we want to have a mechanism in place to capture the changes once they start to occur. It is also, I think, important to mention here that just like in Europe, we do not include carbon offsets. Our low carbon differentials are structured in a way that a physical contract would be structured. As you can see in that pyramid, at the very basis is the exchange-based aluminum price, then our Midwest aluminum premium, and on top comes the Fastmarkets low carbon differential. Next slide, please. These are the specifications for our US low carbon aluminum differentials. As mentioned, we have 2 new ones in the US. One is for P1020, and the second one is for value-added products that include billet, slab, wire rod, and PFA. It is worth noting that at this stage, based on feedback from sources, we're not defining low carbon in terms of scrap content, though that is something we could consider in the future. These specs define low carbon as equal to or less than 4 tons of carbon dioxide emissions per ton of aluminum produced. These 4 tons include scope 1 and 2. Scope 1 being those direct emissions that are owned or controlled by a company, and Scope 2 emissions that are indirect emissions from the generation of purchased energy from a utility provider. The aluminum production is incredibly energy intensive and is highly focused on electricity, and because of that, that is Scope 2. We have gotten some feedback on our specs from industry participants that these Scope 1 and 2 definitions need to be narrowed down to say, including mining, refining, and smelting. If you have any feedback on this or any of the other specifications of our differentials, we would like to talk to you. Please email me. My email is at the bottom of that page. Currently, we're not including Scope 3 emissions at this stage because aluminum companies are not reporting using them in their definitions of low carbon. But we can update the specs as the industry evolves. We could also split out our value-added product categories like in Europe in the future. Christine spoke about different low carbon aluminum producers and their carbon emission levels. The industry is not fully aligned yet on how it defines low carbon. I think that is important to note. As of now, we're setting our threshold at Scope 1 and 2 emissions at 4 tons of carbon dioxide emitted based on information from companies themselves. But again, that is liable to change. We would like to hear from you and talk to you. If you're interested in the US spot market and low carbon aluminum, please reach out to me. Again, my email is at the end of the slide. And here's our first poll question. Thank you for your participation in our poll, and I will pass it on to Andy now. Thank you.
Thank you, Yasmin. Yes, hi, this is Andy Farida. I represent the Fastmarket Research Group. So on the next few slides, my aim is to cover more on the outlook of the underlying LME aluminum price, as well as the growing importance of low carbon aluminum premium. Low carbon aluminum is one of the many mega trends that is here to stay. And we have seen this mega trend being adopted in our everyday life. From a personal example, if you open a Google map and you key in where you want to go next, Google will intelligently offer you environmentally friendly road that uses less fuel. The other personal example is, if you open up your investment app, even investment app could also offer you to invest on green and or sustainable investing. So you're seeing that big shift as consumer awareness on a more circular economy, the need for a greener economy is driving what company and corporate objective. So this mega trend is also evident as the largest metal consumer, being China, is steering itself away from over-relying on real estate to faster adoption of green technology. We have started to see how Mr. Xi Jinping being rather uncomfortable dealing with all the with its domestic beleaguered property sector. But we are seeing a vast improvement when it comes to huge investment on PVs, PV, EVs, a lot of supportive policies are in place. So one of the most notable thing that many would have picked up by now is the fact that the adoption of low carbon aluminum is driven by rising consumer awareness, government green policies, and the strong corporate drive to adhere to ESG and achieve a strong supply chain. Some of the points that my colleagues have mentioned earlier in this slide. So in this instance, if we were to look at the automotive sector, which has been a strong driver in the implementation of low carbon aluminum, we are obviously seeing that being one of the strongest in 2023. But our forecast starts to show that in 2024, some of the tailwind that support the automotive sectors could become headwinds for next year. And the headwinds are such as high interest rate environment and persistent cost of living crisis, which could take some of the wind off the automotive sector. But regardless, our forecast into 2024 suggests that the other key sectors such as construction, domestic appliances, consumer durables are likely to offset any decline in the auto sectors. So there are good bits in 2024. There are bad bits, but overall, our forecast is that the global economy will still kick in. We are not expecting any major decline. So if we can move to the next slide, please. So the previous slide is more on the short-term view of the 2024 market. But if we were to look further ahead and the importance of getting transparency into low carbon aluminum premium is if we were to pick on the automotive sector, the long-term trend remains a bright one, with aluminum being a key metal that can help us achieve a circular economy. Our projection on EV demand complements our view that there's still a very strong market interest for more transparency into low carbon aluminum premiums. So if we can move to the next slide, please. So here is a quick observation that the premium on low carbon material have become a reality on many sales in the European region over the past 2 years. And the rate of adoption will only increase and encapsulate the other key regions over the coming years. What the charts here reflect on the left is the resilience of low carbon premiums. The fact that the differential has risen over the past year, while overall premiums have fallen, is supportive of our view that some customers will remain fully committed to purchase material with a maximum carbon footprint of 4 tons of CO2 equivalent per ton of aluminum. So this is irrespective of demand conditions. And we can highlight that on the next slide, where we could actually see, if we were to put in comparison, where we overlay the low carbon premium for Rotterdam, which is the blue line, against the purple backdrop of the LME aluminum cash price. So while the underlying LME aluminum price has retreated from its March 2022 high, low carbon premium for Rotterdam remained fairly robust. However, it does not mean that it cannot go lower in 2024. We know that there are some healthy relationship there where the underlying cash price could have had an impact on the premium level. However, we do think that 2020 for next year, the backdrop offer a variety of headwinds and tailwinds. But based on our analysis, we expect the underlying aluminum price to remain under downward pressure, but low carbon premium could remain resilient at a healthy price level amid the increased adoption. So in summary, the short-term outlook on LME aluminum, which is the underlying price, can remain challenging for next year. But the introduction of low carbon aluminum premium is only at its infancy, and it is here to stay and likely to play a very pivotal role in highlighting the growing market needs for a transparent and reliable benchmark. I do hope that give you a flavor of how we see things are going. And I want to thank you for your kind attention, and I'll hand it over to Yasemin.
Thank you, Andy. And that completes our presentation. And now we're opening for Q&A. We actually do have a couple of questions. The first one I can take, will the slides be made available? Yes, this is recorded, so the recording and the slides will be made available later. There is another question. Does the 4 tons of carbon dioxide threshold represent only scope 1 and 2 emissions? Would anyone like to take it, or should I answer?
Yeah, I can take it. That's our current methodology. So yes, it covers only scope 1 and 2. I can also take the question as well. I think there was one also about in terms of why the standard is at 4 tons for the green differentials. Obviously, the differentials were launched in Europe in March 2021 following extensive consultation across the industry, across all sides of the value chain, suppliers, producers, consumers, intermediaries, etc. And it was the widely adopted market standard versus the global average. I'd also like to add as well that during our recent consultation on our VIP differential, we also looked into and gathered feedback on that as the kind of definition of what Fastmarkets counts as low carbon. Yeah, I think it's still relevant today.
Another question we have is, why has Fastmarkets not yet expanded beyond scope 1 and 2 to include scope 3 for its differentials?
I can take this one. Yasemin, I know you touched on this earlier. It comes down to the reliability and availability of the data for scope 3, and throughout our market engagement, including this year, with people who produce low carbon aluminium, they're just not in a place where they're able to give that data for scope 3. It's not reliable enough. There's not enough of it. A market isn't yet in a place where it can move beyond scope 1 and 2 at this moment in time. But as we regularly do consultations and review standards, if the industry was to move into scope 3 as well, that is something we would then review also.
There are a bunch of questions on CBAM and its effects on possible low carbon aluminium differentials in Europe.
I guess I can take this one as well, and Carrie, if I miss anything, then yeah, feel free to also jump in on this. I think generally expectation is CBAM is obviously still a way away in terms of its official implementation, obviously in the kind of initial stages at the moment, but it is expected that CBAM tax will have for sure an impact on the way that Fastmarkets prices the underlying premiums, as well as what happens on the low carbon side of things. I think in terms of what happens on the underlying premiums, it is definitely too early to say exactly how CBAM will impact the pricing at the moment. It is still a way away, and is still kind of things could change, and there's not enough information exactly about kind of final implementation. But I think the expectation is possibly that it would essentially fall under a duty. So the kind of spread between duty unpaid and duty paid in Rotterdam, for example, would widen. So you would essentially have a kind of duty unpaid CBAM unpaid premium, and then a duty paid CBAM paid premium. So that spread would widen. Obviously, at the moment, CBAM only takes into account direct emissions, not indirect emissions as well. So those units being imported won't be too wide in terms of their range. on terms of carbon footprint. But yeah, if it does take into account indirect emissions as well, then it may be slightly more difficult. And we may see some shifting trade flows, for example, where possibly the higher carbon units don't end up coming into Europe. Coal-based are kind of disincentivized, for example, and we may see a kind of shift in those global trade flows. But as it stands at the moment, the expectation is for the CBAM tax really to be seen kind of predominantly on the kind of underlying premium, as opposed to on the differential side. I don't know, Carrie, whether there was anything else that you wanted to add on that.
No, I agree with everything you said.
Another question is about the US. I don't know if Christine and Andy would like to help me here, but what will be the biggest factor to generate a green premium in the US is the question. We're hearing a lot about energy and clean energy and how it's pivotal to the decarbonization of the aluminum industry in the US. I think that that seems to be the biggest factor here. Once low carbon energy is available to the aluminum industry at an affordable price, I think we will be seeing, that's what we're hearing from the industry, that we will be seeing a shift in that.
Yeah, I'll just jump in there as well, Yasmin, in terms of how we're seeing that going forward. So one of the slides I drew up obviously earlier was just looking at where the material coming into the US is coming from, and obviously the US has been very used to having that those huge volumes of material coming in from Canada, which is very much low carbon just by its nature. So one can sort of understand to a degree why there would be a sort of like a reticence really initially to be paying that premium. So I think that it's and as you say, at the moment, everything is on zero. There's nothing being paid in terms of premium at the moment. But I think that as we go forward, and as we were talking about, all of us in all the different sort of parts of the presentation, that there is a sort of like finite amount of low carbon in terms of primary aluminium being produced at the moment, and what will be sort of needed is the incentivization really for new projects from a low carbon perspective to be brought on stream. And I think that part of that will be the sort of like the premium will start to need to be paid, I think. And then as I think the poll question that came up, I think around half of the people were saying that it's not likely to happen within a year. And I think that this is being launched at a time of weak demand compared to when the European differential was launched. Really was at a time when demand was booming, and even there we also saw the sort of like the kickoff point, at least for the P1020, was at a low value. So I think that it's something that is just going to become a reality of the markets as we move forward. But it will take a little while for that traction to be gained in the US. But when they're looking for, the US buyers are looking for this very sort of specific certified material going forward and additional tonnages when Canadian material is tied up, then that's that at that point we'll sort of start to see those differentials kick in.
Can I just complement what Kirsten was saying? Is this goes back to the earlier conversation where we see the low carbon premium as one of the many mega trends that is moving. So when we say mega trend, we're looking at the next 5 to 10 years. I know we are barely scratching the surface here, and things could change in the next 1 or 2 years. But the impact of what we know is low carbon premium is here to stay. How it will have an impact on LME aluminium underlying price, I think it's pretty self-evident already that low carbon premium itself has a very different dynamics. And as the other thing that was pointed out, even though this is introduced at the time where overall demand is weak, we if we were to look forward in the next 2 to 3 years, as the global economy recovery starts to pick up again, then this premium could evolve, and we do think that there will be that upside as the shift from the adoption of from ICE to more EV cars. We are obviously starting to see how major economies are shifting their supply chain more into, rather than globalization, into more localization. So that again could be another supportive factors why low carbon premium in certain regions will help to provide that transparency and as a benchmark allow people to engage in businesses or negotiations.
Thank you, Andy. Is there any chance further differentiating low carbon and created from renewable energy without nuclear power and low carbon? That's a great question. There's definitely room for a lot of development in this field. So that is something that could come up in the future. Another question is, will there be a big problem with supply versus demand if there is not a slowdown in automotive? Generally, feedback is that auto OEMs don't need LCP in producers until a few years from now. Will they miss the boat for initial availability? Will supply commitments?
Let me jump on it in terms of that one, in terms of the automotive. So I think that that we're already definitely starting to see many of the companies, the OEMs, which were sort of listed in one of my slides and also one of Carrie's slides, starting to sign deals for these volumes. Certainly the amount of material, because of the sort of slowdown that we're seeing at the moment, there isn't really an issue of supply, even with the sort of like the Russian material locked out of the market for many buyers. But that is something really that could start to happen. And certainly we're seeing OEMs signing MOUs with some of the big players in the industry, not necessarily all of them taking it. And perhaps some of the sort of like the ones which are currently locking into the low carbon are the sort of like the more high-end markets. So you've got Porsche, you've got Audi. These kind of companies, I think, are already buying and certainly have signed contracts at least to take these low carbon volumes. At the other end, you maybe have some of the other sort of like more mainstream car producers that are perhaps focusing more on having just aluminium content in their vehicles, not specifically the low carbon content. And some of this is probably happening in the US, where the carbon content is already sort of low anyway, just by its nature, as we've said as well before. So this is something that I think that at one point we will sort of kick into this point where low carbon availability becomes an issue, but I think that is still a little way off given the demand conditions at the moment. But then we have the other thing on the automotive side, which is going to be interesting as we move forward a couple of years. Really, it's going to be coming into the sort of like the scrap usage. So we're starting to see the setting up of closed loop recycling operations, and the rolling mills starting to segregate, not the rolling mills, but the pressing operations, so separating between the 5,000 and the 6,000 alloy series, getting that segregation. And that's going to start feeding back into the supply chain very quickly in a sort of like significant volumes when the automotive sector picks up. So that will be another way which will be dealt with, I think. More complicated on the PFA side, because it's not so easy to use scrap, although there are developments underway as well on that side in terms of having a sort of a recycled content. And I know that at least one or two of the PFAs, traditional PFA buyers on the cast wheel side are already trialing this material. So that is another side, or another way in which the low carbon situation will start to sort of balance out in the future. And I think that's one of the things that we will start to be looking at in terms of the pricing differential as we roll forward, how the secondary element is factored into it. I mean, right now it's complicated enough on the primary side because there isn't sort of one level playing field in the way that content is carbon footprint is calculated. And when you get into secondary and scrap, it's an even more complex field in terms of certification and standards, etc. But it's something that will be forced, I think, again by the markets.
Thank you, Christine. And on that note, we have a question. How does Fastmarkets assess the carbon dioxide level contained in aluminum supplied? How do you differentiate low carbon and standard P1020, for example? Carrie, would you like to take that?
Sure. So we obviously have our set methodology of 4 tons of CO2, and the vast majority of people we speak to and people who report deals are aware of our methodology. But the same as the pricing, if there was a deal, we could request to see transactions or contracts to confirm that deal. The same as on the low carbon side, we could request to see auditing that's taken place or certificates that are available, and also the level being reported as well. If it was well beyond the rest of the data that we see, we are able to remove outliers that are not reflective of the market, as well as if it's not backed up by what the other market participants are saying, as well as it's pretty widely established which origins and which brands are known to be low carbon in the market. So as and when discussions take place or deals reported, asking where has it come from, what brand is it, that all helps to kind of confirm that the CO2 content is within that maximum 4 tons of CO2 standard.
Thank you, Carrie. Another question, what low carbon upcharges are you seeing in Asia?
I can take this one as well. Following recent engagement, it was reported to us that several sellers in Japan were achieving more than $10 per ton on ingots, and the low carbon upcharges were mainly on the ingot side rather than on the product side at the moment. But it was a good indicator to us that there is development to be had on the Japanese market in line with Europe and the US.
Thank you. There is another question. Do you see low carbon to be a separate LME commodity in the future?
That's sorry, I can take that. That's quite a difficult question to answer. So far, we don't see such a plan yet. But I think that would be down to the LME. But so far, I'm not expecting anything that comes out from it.
Thank you. I think that's about all the questions we have. And that is all the time we have too. Thanks for listening. And again, if you don't already speak with us, but are an active participant in the aluminum market, please reach out to us. Would love to talk to you. Thank you.
Thank you very much.
Thank you all. Thank you. Bye-bye.
Thanks. Goodbye.